I would like to begin with the fact that the flat tax would fail to simplify the tax code. As it currently stands, the Internal Revenue Code contains approximately 3.8 million words on over 10,000 pages. While I'm not denying that the tax code contains a tremendous amount of information and is extremely complicated, our tax code does not inherit its complexity from the progressive tax system that is now in place. According to Alex Blinder of the Wall Street Journal, the truth is that 100% of the complexity inheres in the definition of taxable income, which takes up millions of words in the tax laws. In fact, only 15 of over 9,000 sections deal with determining tax rates and brackets. Even after removing these sections and the more sizable sections that deal with tax deductions, estate, and capital gains taxes, over 8,000 sections dealing with more important issues such as banks, foreign taxes, tax crimes, and excise taxes would still remain. According to Robert McIntyre of Citizens for Tax Justice, the hook that flat taxers are trying to snag us with is simplification, but there is nothing simpler about a single tax rate versus several rates. Now I'd like to move on to the fact that a flat tax would shift the economic burden from the rich to the poor and middle class. According to Andrew Lundeen, the director of federal projects for the Tax Foundation, the richest 1% pay over 35% of our taxes, while the lower 90% only pay 31.74%. These values have changed since 1980 from 19.05% and 50.72% respectively. This shift is due to the change in incomes over the last 30 years. According to Robert Frank of the New York Times, the top 1% earned 275% more in 2007 than in 1979, while the earnings of middle-income households grew by less than 40%. If the tax rate was set in equal value for all citizens, the already growing difference between the classes would greatly increase. Money loses marginal value the richer you are. Since the price of staple goods, such as milk and bread, have a fixed cost, they cause more financial pressure on those with less disposable income. By shifting the tax rates, you would be taking more tax dollars from the poor and low-income households. This tax shift should take hundreds from families where $20 could be the deciding factor between a fresh meal and gas in the tank to drive another day of work. And you would be giving tax breaks to families that have never known what it means to live paycheck to paycheck. Now I'd like to move on to my last point, that the flat tax removes deductions that provide social benefits. One major source of tax breaks employed by our current system are charitable deductions. These deductions allow for citizens to be rewarded for helping their communities or supporting causes that they believe in. According to Kevin Johnson of Opposing Views, wealthy donors tend to give to university and hospitals, whereas low-income wage earners tend to donate to religious institutions. A flat tax could alter that pattern. Tax deductions for mortgages also provide great social benefits. Our current system allows all interest paid on the mortgage to be tax deductible. According to Michelle Hurst of the Fiscal Times, in 2011, the mortgage deduction accounted for $99.8 billion in tax deductions. This benefit allows for a stronger housing market, where buyers are able to have greater confidence in their investments. Tax deductions also provide incentives to save money rather than to spend it. While our current system has undergone some changes, it has been in place for almost 100 years. Because of this stability, citizens can put faith in the incentives that they are a part of. Dr. Ulbrich, an economics professor at Clemson University, states, the first argument against the flat tax is the disruption that would come from trashing the current income tax system in favor of something untested and untried. It is hard to get people to save for their retirement, but the tax treatment of employee pensions, IRAs, and 401ks has played an important role. Thank you.